Barely 2 weeks ago, we've had the whole market being extremely bullish on China. We've heard billionaire investors such as David Tepper talk about China stocks, investing in everything, basically buying everything across the board. We've had these headlines here. China weighs injecting $142 billion of capital into top banks. Most of funding will come from special sovereign bond sales. Move is part of economic stimulus package unveiled that week. Such a huge injection would be the first since the global financial crisis in 2008. Now, since then, of course, China stocks, Alibaba, JD, Pinduoduo, NIO, all of that have gone up and by quite a lot. Now, you might say it's purely because of these announcements, or it's because, well, suddenly the market realized that, oh, these stocks are actually quite cheap, even with the, let's say, premium that you're going to put, or reverse premium that you're going to put on it because of the China risk. Even after that, it was quite cheap. Now, what is happening right now? Well, you've seen the Hong Kong Stock Exchange be down 9.4%. You've seen companies like Pinduoduo, Alibaba, NIO, JD, Baidu, and the ETF down over 6%. This is at the time of making this video. Might be down more, might be down less, but it's an ugly day for Chinese stocks. That said, it wasn't that long ago that Alibaba was trading at $70, $75. So now at 110, even with the 6-7% pullback, still up by quite a lot. And the same can be said for all the rest here. So what exactly has happened? I'll cover all of that in this video, share my own opinion on investing in Chinese stocks as well. It's a pretty balanced opinion, I think. So if you're interested in all of that, sit back, relax, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with what has happened. There was an event on Tuesday. China's top economic planner, the National Development of Reform Commission, or the NDRC, held a press conference on Tuesday morning, in China that is. China's economic planner outlined new measures to support the struggling economy. However, the government refrained from implementing significant new stimulus. China's NDRC chairman announced a special purpose bond issuance to local governments to spur their growth. He explained that ultra-long special sovereign bonds totaling 1 trillion yuan have been fully allocated for regional projects. The central government will release a 100 billion yuan investment plan for the next year by the end of this month, ahead of schedule. Now, a lot of folks thought that today would be the day where they announced even more stimulus. And so the anticipation was quite high because of what we heard a couple of weeks back. And so we've got already some comments from some economists, from some analysts as well. We've got here one guy, chief economist for Greater China and Northeast Asia at Standard Chartered Bank in Hong Kong, draws a correlation between the Hong Kong stock market drop and the NDRC event. It looks very much related. The only driver for stock is today's NDRC event. Market expectations were high. The stock market especially had high expectations. But this is the NDRC, not the Ministry of Finance. Even though they didn't announce fiscal stimulus today, that doesn't mean there won't be fiscal stimulus. Ding Shuang expects fiscal stimulus measures to be announced by the month's end. Another commentator here, Alicia Garcia Herrero, chief economist for the Asia-Pacific region at French investment bank Natixis in Hong Kong, said the following. They created expectations of a much bigger stimulus, so everybody was disappointed. Even worse, they talked about front-loading from 2025, so no new money. Basically, they have created a bubble, but they're not ready to feed it further with fiscal stimulus, and bubbles need that. Words are not enough. I mean, they've created a bubble, to be honest, even Alibaba at $110, all of these stocks, not just Alibaba, they're not really in a bubble type of environment, in my opinion. There could be still a lot of value. Yeah, maybe on a technical basis, technical analysis and all of that, yeah, maybe it might be overbought. But to say that these stocks right now are already in a bubble, probably not. Maybe the environment around the stimulus, that might have been a bubble, the expectations, okay, maybe that might have popped a little bit, expectations come down. But like the first guy said, Even though they didn't announce fiscal stimulus today, that doesn't mean there won't be fiscal stimulus. Maybe they're also waiting to see what happens with the elections in the United States. Might be, because that is happening in less than 30 days. Now, for those that needed a small reminder, I'm going to go over Alibaba, Pinduoduo, and JD here real quick. If we look at Alibaba's growth in the last 10 years or so, revenue has gone up by 1,166%. Free cash flow, 311%, while the stock price, the stock price has now changed a little bit, but it hasn't done as well as you would have thought. If we look at Pinduoduo, ticker symbol PDD, not the you-know-who. I already made that joke once, but I thought it was a good one, so I'll repeat it again. Total revenue has increased quite fast as well in the last couple of years, 1,170%. If you look at free cash flow, that's up by also over 1,500% since Q3 2019. So the growth rates for Pinduoduo are much higher than those for Alibaba. And then if we look at JD, they've got their huge growth phase here, closer to 2016, 2017. Then, of course, closer to 2020, we've seen growth accelerate to as much as 44%. But since then, growth has been decelerating quite quickly. Now, with Alibaba specifically, I touch on Alibaba more because, one, I've been following this company more, and it's one of the largest positions in David Tepper's portfolio. We can see that in the last couple of quarters, revenue growth has started to reaccelerate a little bit. Not by much, but hey, we've seen a deceleration for quite a long time. Now we're seeing a small reacceleration, so the market liked that as well. Because remember, even before this whole stimulus thing was announced, the stock was already going up steadily. Not by much, but it's not like it's only because of the stimulus announcements. Looking at the various segments of Alibaba, we know that the international segment is the best performing one. Cloud, to be honest, should have done much better, not really moving that much, only growing 1.6%. Taobao, which is the China one, China segment, China commerce revenue, has seen some reacceleration, although far from what it was previously. Hopefully now that the economy is reopening, potential stimulus packages, etc., that segment should definitely benefit that. Now, looking at David Tepper's Appaloosa management portfolio, it's a portfolio with 37 stocks worth over $6 billion as of Q2. Now, as you can see, the number one position here, Alibaba, 12.3%, Amazon, 10.9%, then we've got Microsoft, Meta, Google, Oracle, Pinduoduo, etc. Now, what has happened in Q2 is that he actually reduced Alibaba a little bit, but as we've seen in the past video, he did say that he bought everything across the board with regards to China stocks, so I would expect to see here add in Q3. But he did sell Magnificent 7 stocks. He did sell 9.22%, reduced the position in Amazon by 9.22%. For Microsoft, that's a reduction of 15.62%, Meta by 16.7%, Alphabet by 7.23%, Oracle 13%, Pinduoduo 7.6%, AMD close to 16% reduction, but it did buy the iShares China Large Cap ETF, added there 8.86%. Now, as I said in the previous video, I think if you don't want to pick, let's put it that way, if you don't want to pick one specific Chinese stock, but you still feel like despite all the hate that Chinese stock gets, if you want to buy an ETF, I think this one could be it, KWEB. Of course, you can also go with what he did, the iShares China Large Cap ETF. They are both of them could be good choices. As you can see here, Alibaba number one holding, then you've got Tencent, then Meituan, JD, Pinduoduo, Trip, KE Holdings, Baidu, NetEase, etc. That gives you exposure to the broader, let's say, Chinese economy. If you would like that, of course, it's not for everyone. Now, to share my thoughts and my opinion on this matter, to be honest, today's reaction and everything that I've seen from people commenting on the matter, I made a joke. I said in French we call this le rug pull, the rug pull. But to be honest, what has changed? 10 days ago I made a video, you can watch it back, and I'll say the exact same thing right now. What has changed is that, they're still expecting to stimulate their economy, right? Maybe the expectations for today's event were just overblown. But that doesn't change much, right? For these companies, Alibaba, Pinduoduo, JD, Tencent, all of those companies. No, they will still benefit from the stimulus that will happen. Now, when? I don't know. But I'm pretty sure that it will happen. Plus, remember, these stocks have already recovered a little bit even before the so-called stimulus was announced. So don't forget that you're buying companies. Yes, of course, these are Chinese stocks. If the Chinese economy is doing better, if the Chinese government is expected to stimulate the economy, it's going to help these companies. 100% agree on that. But to now suddenly say, oh, China is uninvestable again, but 10 days ago, everybody was saying, oh, actually buy China when everything was going up 10, 15%, to me, it just doesn't make sense. And I'm not the biggest fan of China. I think there is a risk there because, well, what the CCP does is what's going to happen with these companies. But to say that, oh, we don't know what might happen because it's China. Well, do you know what will happen because it's Europe with European things? Do you know what will happen with US stocks because it's US things? The Fed speaks, Jerome Powell, we don't know, right? You don't know what's going to happen. Of course, you cannot compare the CCP to Europe and to the United States, I understand that. But from a macro perspective, we don't know. Even the economists have no clue, right? Remember, inflation was transitory. And then suddenly we all got destroyed by the fact that it was not. So even the folks that are supposed to know don't really know. So yeah, to me, if 10 days ago you made the conclusion that, oh, actually China is investable and I hold some shares and I'm quite happy with the performance, today that shouldn't really change because it's down. If 10 days ago you had no position, but you were like, oh, actually maybe now might be a good time to buy Chinese stocks because of what I've read, today, again, might not be the day where you change your mind. Actually, today is a good day to still be bullish and to buy companies that are down 7 to 10%. So that's basically it for now in this video. Hopefully it's pretty clear what I think about the subject, and I think it's pretty clear what is happening right now. Plus, don't forget, lots of folks are trading, lots of folks made quite a lot of money in the last 10 days. So yes, there probably is also some profit taking from those Chinese stocks. But I can bet $1 on the fact that when we're going to look at David Tepper's Q3 movements, we're going to see a lot of green when it comes to the Chinese positions. So that's all I've got for you today. If you like this type of videos, leave it a thumbs up, subscribe if not, and I see you all in the next one. Bye-bye.